Good morning, FMMTs. What we have right here is we have a gap open on APKT. Electronic Arts, their earnings report wasn't no good. People wonder, well, why is it up $1.63? It's very simple. They're repurchasing their own stock. Okay, First Solar. So what we're looking at today compared to yesterday when we did our walk around Wall Street and pre-market is you still have very diminishing gap. There's only a few here on that. Now, on the other side, let's take a look at some of the gap downs. And it too is here. Let's go in here. It too, Netflix is gapping down, Broadcom Semiconductor is gapping down. So we have a little bit more of a higher ratio of gap down than we do gap up. So basically, what we're going to be looking at here is exactly how that bull will show up like he did on 2/1. Today is 2/2 of 2011, and they showed up and they came in the market. And the thing about it is, where are they now today? And we're going to find out. So this is the gap open down list. So the gap downs that we have are going to be up here. Netflix 2.93, 2.44 on Broadcom Semiconductor, JDAS Uniphase. Remember shorting that at around $450 a share back in the dot bomb days. So this is the gap down list today. A little bit different than yesterday. Now we have a few little gap opens today because we do. And so we're going to be taking a look at what the gap ratios are and how they're going to pertain to the broader market as far as the bull and the bear goes. And are they willing to shovel away any bad news? Like I said, the gap up is very diminished. Nothing like yesterday. When we get to the big board on the NYSE, we got a retail stock, LZ there, up 565. So BHP was on this gap up yesterday. Potash and the ags, this is the gap up. But notice that the gap up on the NYSE compared to yesterday has diminished. The key is moving forward as far as the pre-market goes with gap open and gap open down. And on the NYSE, we have a very small diminishing factor in some of the older economy type stocks. On the NYSE, you got WHR down $4. HSP, these are probably earnings related. Now, what an MMT does is he looks for that gap down, and if it's a leader and it has a high volume trade, that's where you get that left elbow gap down and they run that thing back up toward the neckline or half of what it was, and then it rolls over. So when we're looking for weakness and strength, this is what we look for. However, the key ingredient of the whole exercise for new MMTs is to understand what the difference was yesterday and what the difference is today. So basically between the NASDAQ and the NYSE, we're not seeing nearly the gap ups that we had. The futures are very weak today. What happened last Friday is that we had 166 points down on the Dow and everything took an extreme haircut. Now, one of the things about today being in the middle of the week is that we got the U.S. unemployment stats coming out. It comes out once a month. And we have the ADP report that we'll be going over later on that's going to take a look. I don't believe that the unemployment here in the U.S. and even around the world, but particularly in the U.S., is going to change. It's going to take several years. Okay? And there's lots of different things. That's for our economic section. Right now we're going to get ready to trade. The NASDAQ futures are down 8. Dow Jones is down 23 handles. S&P down 390. Fair value on the S&P is $1.29. Fair value plus 17.16 ratio, 17.6 above fair value. And the NASDAQ, on the other hand, down 8.5 handles in pre-market futures, has only got a fair value of 0.80. The key to today is, now that we've had the counter trend to Friday selling, that the bull would come back because of the exuberance, and that both the fear indicators on the VIX and the VXN would have a reversal. And the key was to looking at that complacency and the lack of fear in the market and everything is great, is that how that would set back up after we got what we call a counter rally. And we talked about how that bull would have to come back and have almost as equal amount of buying as they had selling, and we did. And the actual ratio between the sell side and the buy side was somewhat a little bit more positive. But here is what happens, and it happens like this. We've made our move in the SMF platform today. You're going to look for just, if it is the opposite of yesterday as far as establishing strength and weakness at each teeny price action line. Remember that the bull has to be more than a one-day wonder. And same with a bear. You know, the one day I'm on it and the one day I'm coming back. So the bull came back and stepped up to the plate, because that's exactly what happened on 2-1. And it was because it was the first day of the month, and fund managers who have not performed the market because of their lack of education and their inability to understand what it's all about, they're just as retail as you. And once again, that each time the market climbs higher and it gets away from them, they feel that it has to come back down and then I'll get in. What we seen in performance yesterday was a group of those institutional investors, not institutional traders, but institutional investors are different. And we seen them step back into the marketplace. Now that that money did come back into the market, what we're going to look at is, do we just roll right over today, and that selling the top end of the move short would be what we would be doing on the opening bell, meaning that anything that gaps up, we're a short seller. However, it's an intraday short. Anything that gaps down to that big left elbow gap down, we're a buyer down there at the negative ratio for a fast trade, because that's where the public is going to walk away. And that's the public tape. They're going to say, oh my God, I want to touch that thing. It's down $4. Well, we buy it. We make $2 or $3 off of the move off the bottom. And we do it every single day of our life. And so we're looking for a very predefined gap down and gap up. And today we're going to measure each of the indexes, and we're going to use our system that's going to tell us exactly where that bull ratio count is as far as money flows and convictions are. So what I want MMTs to be aware of, if stocks are weak after they make their initial bounce, if they go a 369 or 369 1215 and then they start sliding that bid right away, that means that it's a short seller's market. So once the market makers walks the shorts out up on that 15-minute chart, or ever how long he does, but then when the public isn't there to buy, guess what? Collapse and down you go. And that's why those shorts work very good intraday. And it's a master of technique. It's a master of understanding what's in the SMF platform. So today is a big day for two reasons. One, you're going to have lower volume day. I can already see it. Two is that you've got the unemployment number coming out on Friday. So now the retail bulls and the retail institutional bulls are all going to be sitting there in a big, fretting over what may or may not happen. And the thing about it is, some of them have a tendency of sitting on the sideline until the number actually comes out on Friday morning. So what we're going to be looking for is a lower volume count rate as far as between the sell side volume from yesterday's big up move would be diminished. That would be good for the bull. However, if people are going to come back in, the key ingredient here is to really find out what that bull intention may be. If he's going to come back today And they're going to start selling because they got a big move yesterday on the first day of the month with fund managers putting money to work in the market because they're underperforming, and they're underperforming a lot of asset classes. Is that it's going to be a very, very touchy subject between that bull and that bear today, and we're going to find out who's got what conviction. The thing about the bond market is the bond market can't put in a bottom in equities because, you see, if the 30-year bull, I was shorting bonds, we know, and I said the 30-year bull market in the bonds was over. I said that like 8-9 months ago. So that would make equities attractive forward-looking down in the pipeline, and that's why we're at the index levels that we're at today. So it's a very careful analysis when you're a market maker. He didn't care about any of the stuff I'm talking about. Either he's taking the public for a ride with a breakout to the upside, and when they're not there, he's taking the public for a roller coaster ride down. It's that simple. There is no more simplicity than that for them. The broader Wall Street tape and community, on the other hand, is what we decipher. So basically, this is the gap down list on the NYSE, gap open down list on the NASDAQ. Are these stocks here? It's not horrendous, but it's nothing like yesterday, where the gap down list yesterday was very diminished. Diminished means there were very few of them, and everything was gapped up, and the bulls were running at full breed and full steam. I gotta get in. The train is leaving the station. I've got to make a transaction. Well, let me tell you something, folks. That TQQQ, that bull, it made a great move yesterday because Apple had made a great move. But when Apple gaps down, that bull and the bear are in an extreme bull and bear fight. TQQQ being the bull, SQQQ is the bear. Then you got the fear indicators that need to be watched. Then you've got to understand that if you have a high teeny beta in the brain, in the SMF platform, then prices at support are more volatile, and they're going to break below those lows, and they're going to go down another 1 or 2 teenies. One of the things that we found out in the platform is we were mathematically 3 teenies up, 3 teenies down, 3 teenies up, but early in the day we had that big move. Today what we're going to be very focused on is where we come back down to that lower teeny level with an explosive 3-minute buy action bar taking out the sell side. But remember, one thing you're taught here is that the distance between the buyer and the seller, the buyer's got to have the same distance as the seller, because if they don't, then that means that the seller net is in more in control of the market than the bull. So we're going to be watching very, very, very carefully after the opening bell, the first 20 minutes where all the electronic tapes go in and everything is happening there. Is that what is going to happen? We already know. And the deciding factor is not an opinion, but raw data analysis between the buyer and the seller in our platform. So when they come down and they hit that lower end, what we want to see for the bull side of the market is they come back in and start hitting that same buying spree as they did yesterday. It cannot be a one-day wonder, because one-day wonders are not sustainable. And we would look for key reversals. NASDAQ comp went up 51 points. NASDAQ 100 had a 43 points up the other day. That erased the Friday selling. Now, today is the deciding factor. Pre-market analysis.